Okay guys, welcome to my first video tutorial on how to not lose too much money trading, right? Because you're gonna lose some money trading, but I'll teach you how not to lose too much money trading, right? So I'm gonna teach you how to catch winning trades in between thousands of losing trades, right? So for this tutorial, we're gonna use last Friday's price action, right? The beautiful one, the bull run, the rally that you could have made so much money to retire yourself, but you didn't catch. Neither did I, right? I actually didn't trade because I had to do some dumb shit. No, I actually had to do some important shit in between. But anyway, long story short, I didn't catch the shit, but it was very easy trade to catch. So I'm gonna do price action reading on Friday. I'm gonna teach you how to catch winners and avoid losers, right? Which is something that I need to do too, right? If I was listening to myself, what I'm saying, I would be fucking billionaire, right? But problem with trading is not that you don't know what to do. It's like you know what to do, but you're not doing it because of your emotions and you're dumb, right? Anyways, back to the technical, right? So this here is the Nasdaq chart, right? The 50-minute chart. It's on reply. So went back in time at 9:30, right? We're gonna go back to 9:30 on Friday, right? So hold up. This is the current chart. We're gonna go back to 9:30 market open on Friday, right? So this is Friday, 9:30 market open. This is where you were when the market opened, right? Correct? Correct. I don't know how long the video is gonna be. I'll try to go quick. But guys, literally, if you listen to what I'm telling you, these are things that I've learned over 2 years of trading, right? So this is what I'm using every day. This is pretty much trading in a nutshell, what I'm gonna teach you here, right? So first thing you're gonna do when you get on the chart, if you trade the 1 minute time frame, if you're a scalper, which majority of futures traders are scalpers, right? If not everyone, because how the fuck are you gonna trade futures overnight? No firm allows it unless you trade your own funds, right? And then you need to pay. Well, I'm not gonna get in depth why futures is for scalping, but majority of you are scalping, right? So first thing what you're gonna do is you're gonna mark the 15-minute time frame areas of reversal or point of interest. What does that mean? When you scalp on the 1 minute, you want to know where the higher time frame areas that you should be looking are, which is the 1 hour and most likely the 15-minute most of the time, right? So this is the 15-minute chart. Right now, this is the 15-minute chart. All right. Let me add some text for you so you don't get confused, right? This is the 15-minute chart. 15-minute chart. This is the 15-minute chart. Let me make it black, right? What the fuck did I write? GKP, okay, chart, right? Okay, this is a 50-minute chart, right? First, you're gonna go on the first 50-minute chart, right? You're gonna mark this area. So this here is called imbalance, right? This video to people who already know the basic of ICT concepts or basics of trading, is imbalance price action, fair value gap. This is what it is here, right? This is imbalance price action, fair value gap, right? This is important area because the price opens near it. So it's most likely gonna have a reaction of this area, right? So this is, what is this? 50-minute fair value gap, right? This is a 50-minute fair value gap. I'm gonna put it here. What else do we go above, right? We have another 50-minute fair value gap above, right? Which price is currently trading into, right? So this is another 50-minute fair value gap. So you're gonna mark these areas when the price opens, right? What do we have afterwards, right? You're gonna go on a 1 hour. Do we have any 1 hour fair value gap, right? Ignore this action because the trading view reply on different time frames, it gives you different data, some a bit more in future. But also, if you can see here, we have another 1 hour. This right now, hold up. Right now, this is the 1 hour chart. So I don't want you to get confused. This is the 1 hour chart. Right now, we are the 1 hour chart, right? So you got the 15-minute fair value gap mark here, another 15-minute fair value gap mark there. And then we're going to mark the 1 hour fair value gap over here, right? You're not going to go over the whole chart and mark every single fair value gap. You're going to mark the ones that are close to the price, right? So this here, right? It's another 1 hour fair value gap, right? Now, once we got all the fair value gaps marked, right? We got the 1 hour fair value gap, the 15-minute fair value gap. We're back on the 15-minute chart over here, right? Back on the 15-minute chart. Once you have all this marked, right? Clean. I'm gonna make this tutorial like for dummies because I'm an idiot, right? I want someone to tell me exactly how it is, right? So you got these things marked. So this is what we're gonna do now, right? Now you're gonna mark the second most important, if not the first most important thing, which is the liquidity, right? You're gonna figure out where is the buy orders most likely sitting at and the sell orders most likely sitting at, right? You can do it two ways, right? You can see the highs and lows, the equal highs nearby, or you can also check this and confirm it with a bookmap, right? Not many people have bookmark, but Bookmark shows you where exactly the pending orders stand now, right? If you do only ICT and you don't use Bookmap chart, then you can just mark them based on equal highs, lows, etc., right? Most time it's pretty much the same. With experience, you don't even need to look at Bookmark anymore, right? So let's mark where the liquidity stands at. Remember, this is the 50-minute chart, right? So the 50-minute chart every week, every week of the candle, and whereas many weeks of the candle is going to be liquidity on a smaller time frame, right? For example, see these weeks over here. This is going to be 1 point of sell side liquidity, right? Where it's going to be another point of sell side liquidity, the low. This is going to be another point of sell side liquidity, right? This is already, we have 2 points of sell side liquidity, right? Where is the nearest buy side liquidity? So the nearest buy side liquidity, one of them was here and then taps into this fair value gap, which was already taken, right? One of these was over here, but was already taken. So we don't care about that one. Another one is going to be this high over here, right? This high over here is buy side liquidity. Where it's going to be another point of interest, this high over here. That is another buy side liquidity, right? Where it's going to be another point of interest, right? Another point of interest is going to be either this high over here or some highs on some highs made towards this high over here. So it's going to be this. They're all very close, to each other. Whichever one you pick, if price starts running all the way high up there, it depends on your risk acceptance. If you're going to hold it all the way up to here or past here, or you're just going to take profits at here. But you can take profits at any of these points, right? And you can take profits at any of these points, right? And if you starts running below this, you can look for points of sell side liquidity over here on all the time frame, right? But for now, we are in the middle of this, so we don't really care about where could we take profits if the price starts running much higher, right? So for now, we're going to only mark this buy side liquidity, that buy side liquidity, this sell side liquidity, and this sell side liquidity, right? Okay, now this should be done before the market opens, right? Because if you're doing it while the market opens, you're just going to be wasting time figuring out what the areas when the price action is already reacting throughout these areas, so you should be prepared. So you should sit on a computer, mark these areas before market opens. So when the market opens, you already know which areas are you looking for price to react and how it reacts from these areas, correct? Now, once we mark these areas, we can move on a 1 minute time frame. Oh, we have another area here, sorry. This area under this 50-minute fair value gap, it's also liquidity, right? As I said, this is another area of liquidity. It's a small liquidity, it's nearby, but this is also another sell side liquidity, right? At the bottom of this wick over here, right? So now we have these areas of liquidity and we have these areas of buy side liquidity, right? And the price in between. Now we're going to go to 1 minute time frame, right? Because this is where we're going to execute our trades and this is where you're going to read price action more precisely. So going to 1 minute time frame, right? Let me just change hold up, where is my... Yeah, let me go on the 1 minute time frame. Hold up. Let me reset the chart. The market's still not open, right? This is what you're gonna see when before the market opens. I'm just gonna make sure people know that this is the 1 minute time frame, right? This is the 1 minute time frame, and this is what you're gonna do. So this is the area of liquidity. This low here is part of the fair value gap, and this is a trend line liquidity forming, right? You don't want to sell or buy in this area. Why? Because the price action is consolidating, right? When you see price action consolidating like this, you're going to wait for price to go, sweep some liquidity, tap into fair value gap, reject, and then go on a sell, or do the exact same shit in the opposite direction and look for buy, right? Right now, this area, we're going to use as potential liquidity that's been generated, right? As you can see, there's liquidity over here at the bottom, as we marked on the 50 minutes, right? Cool. So the price is going to open now. New York open. At the moment, it's 9:30. The market opens. And we're just going to wait. We're going to wait and see some reaction, right? We're going to wait and see some reaction. What did the price do? The price went up and took the buy side liquidity we marked, right? We marked this buy side liquidity on the side. Price went there and took this buy side liquidity while it's tapping into the 1 hour fair value gap. What does that mean? That means that we can potentially start looking for sell setups. We're looking for shorts, right? You're going to look for shorts. How are we going to look for shorts? The best way, or one of the best ways to enter short setup, is to look for inversion fair value gap. What is inversion fair value gap? I'll show you right now on the chart, right? So now we're going to be waiting for fair value gap to get inverse. Why? For example, this is a fair value gap, right? This here is a fair value gap. What you want to do is price to take liquidity, travel to this fair value gap, and instead of instead of reacting of it and continue going up, you're looking for price to break through it and inverse it, and then have a reaction from it on the way down, right? To get on the sell setup. This is what you're gonna be looking if you want to sell, and it's the exact same thing you're gonna be looking for when you want to buy, right? Right now, when price sweep the liquidity, where is the nearest fair value gap? You know, at the moment, the nearest fair value gap is this, and this one that just now formed. So this whole area over here is massive, right? This is a very big fair value gap. So what does that tell us? It tells us that all the price swept liquidity on the top and enter the 1 hour fair value gap. This setup is very risky. Why? Why is it risky? Because the price needs to, first, this is not one fair value gap, and for the best setups, you want to be a singular fair value gap to get inversed, and it's 2 fair value gaps. Even if you go on the 2 minutes, you know, this is a massive fair value gap even on the 2 minutes. You see how big this fair value gap is? It's massive. So the reason you don't wanna take a sell right now, always swap the liquidity, is because on the 1 minute there's multiple fair value gaps, and on the 2 minutes it's a one massive fair value gap. What does that mean? It means that the price needs to go all the way through here, inverse the fair value gap, tapping back, so you can go all the way down here, right? So why is this not a good setup to sell? The reason it's not a good setup to sell is because by the time the price inverse this fair value gap, you will be already trading in discount, right? This whole range here, right? This whole range over here, you're already selling in discount. What does that mean? It means that you can get fucked very quickly without having break even. If you enter over here, you have only this distance in between until price can reverse. Why would the price reverse? Because we have sell side liquidity down here, right? So if you wait for the whole massive fair value gap to inverse, retrace, enter here, you know, and you have a sell side liquidity sitting almost next to your entry, you know, that means that the price can easily do one of these things, right? It can inverse this, tap you in, come here, sweep the sell side liquidity, and then start going up, right? If you enter so close to the discount zone, you're not going to have enough time to place break even, which means you're going to take a loss if that liquidity gets swept and the price continues going up, right? Also, you can get lucky and the price can continue going down, right? But at the same time, you're taking more risk because you're selling in discount, right? So to stay on the safe side, you rather sell somewhere from here. But if the price action is not giving you, because if you sold over here, you'll be able to hold this trade all the way down to here. And even if the trade reverses, you'll be able to get on break even, right? So if you sell over here, if there was a fair value gap, single fair value gap over here, and you sell at the top, right? And you hold the trade over here, right? Or even here, right? When the price reverses all the way up to here, you'll be a break even, or you would have taken partial of this liquidity over here, right? But if you enter over here, right, you won't have enough time to go to break even. You know, you won't have enough time because the price will play around this area a lot. So you wouldn't be able to put the break even. You need to let the price to, you know, you do an inducement on the way down and then put the break even. And you're taking high risk because you're buying a discount. I know I'm repeating myself a couple of times, but this is very important. And this is very important to understand because it's going to save you a lot of bad setups. You want to buy in discount. If price is not letting you buy in discount because the fair value gap is too massive, there's too many fair value gaps, miss the setup. Wait for better setup with better alignment of the fair value gap. You want the fair value gap to be singular, and if you're buying, to be in discount, and if you're selling, to be in premium. Does that make sense? Hope it does. Cool. Now let's see what the price is doing afterwards, right? We do have this 2-minute fair value gap over here. We do have this 2-minute fair value gap over here, but it's too big and it's too massive, so we don't want to use it yet, right? We go back on a 1-minute time frame, going down. Now the price inverse the fair value gap, right? So if you want to enter here, once again, just to show you, you can't enter. You're going to put your order over here. You're going to put your stop loss around here, and probably going to target some liquidity sitting down there, right? Probably that liquidity over here, right? Very risky setup, right? It is valid because it swept the liquidity and went to higher time frame, but it's risky setup because you are buying pretty much in discount next to sell side liquidity, right? So you don't have any space to exit if it's a loss, right? Let's go a bit further. Well, now the setup is completely invalidated because we just swept the sell side liquidity. The sell side liquidity was here, it was swept, and if you're still waiting to enter the setup, now you're taking incredible risk to get fucked in the ass with a big dildo. Why? Because we just swept sell side. What happens when price sweeps sell side or buy side? it has a higher chance of reversal. So the price can come here, create structure, and continue up. And once you enter, you won't even have any price action going your way if it's reversing. It's just going to straight up, fuck you, right? So this setup here is invalidated because of the of where the price is standing and what it did before it went there. Cool. Let's continue. So now when the buy is invalidated, we're going to look for, when the sell is invalidated, we're going to look for buy, right? Because the liquidity just got swept. So we're going to wait for a setup that's going to come after, right? Now we're just openly waiting, right? If the price continue going down, we're going to wait for it to create rejection somewhere from here for buy, or create rejection right now after it swept the liquidity for buy. Or if it wants to continue selling, we're going to wait for price to create some structure, take some buy side liquidity that you created, and then continue shorting, right? Right now, shorts are out of the question, right? We're going to wait. So now we're looking for buy because that one was swept. The closest fair value gap to buy is this one. We do have a second fair value gap above over here. But if you feel confident, it's still not a perfect setup, but if you feel confident the price is going to go up because it's swept this liquidity and it has this whole range over here to travel, so you'll be able to put a break even pretty quickly, you can take a buy from this inversion here. Because why? We tapped in the 50-minute fair value gap right here. We swept the liquidity over here. We're inversing the first fair value gap, which is in discount. So you'll be able to enter this trade, right? You'll be able to enter this trade, put your stop loss over here, right? At the bottom of this candle, at the body. And you'll be able to probably target the next buy side liquidity, which is right here above, right? Why is this a better setup? Because you are entering in discount. If you were to enter over here, it's going to be more risky because it might just sweep, create equal heights, and reverse. But you're entering at the bottom of the move right after it swept liquidity and tapped into the fair value gap, which makes it very hard for you to not get a break even if you're wrong on the direction. Because when it sweeps liquidity and when it taps into fair value gap, the price will have some sort of movement towards the opposite direction. And most of the time, it will be big enough of a movement if you enter early to get a break even if you're wrong. So this is a good entry right now. So this could be your first entry, right? If you want to be more conservative, you might look for singular fair value gaps. So if you go on the 2 minutes, right? If you go on the 2 minutes, you still have one here, you still have one here. If you go on the 3 minutes, right? Then you only have a very small fair value gap over here, right? Now, if you buy here, you're buying in discount, but it's a singular fair value gap, right? So this could work out because it's a singular fair value gap, right? But you're also buying in the premium, right? So you need to kind of weigh the pluses with the minuses. There's no exact correct way to do it. We need to weigh the pluses with the minuses. If you were to buy here, it's single fair value gap, which is a bonus, right? On the 3 minutes, but then you're buying too far in discount. So you might get stopped out, or your break even won't be as nice. You might get break even quickly, or you might get stopped out on a loss if you're wrong, right? Here, it's a multiple fair value gaps, which is a minus. Ideally, you want a single fair value gap, but you just had a swipe of liquidity and you had a tap into a 50-minute fair value gap, which makes a safer entry. Not as good because it's not a singular fair value gap, but it's a safer entry, right? So me personally, I would probably take this safer entry over here because it's early and I'll be hoping on getting a break even quickly, right? If you take this entry, once it gets inversed, right? Right now it's inversed. You can put your pending order here. Your stop loss will be at the bottom over here. There's a very tiny small fair value gap if you zoom in here, right? There's a very tiny small fair value gap. Normally what I do is I look for a fair value gap that was created during the inversion, which is going to be this tiny fair value gap over here, right? So there's this tiny fair value gap over here. I'm going to look for fair value gap that was created during the inversion. Normally it's a bigger, but it still counts. It's still a fair value gap. I'm going to put it on the third candle of the fair value gap. So the inversion is going to be the first candle. The fair value gap is going to be the middle candle. And the third candle, is going to be the third candle over here of the fair value gap. So my stop loss is going to be at the bottom of the third candle. It's not going to be the full candle. It's going to be just the body, because if the price travels to the body, it's going to travel to the wick, and that's proven. So just put it at the body to save some pips and ticks, and that should be the best stop loss you can ever have, right? If you put your stop loss over here, it might work. It might work. You might get lucky. You might get higher RR. But vast majority of the time, this is the most accurate stop loss to put on the third candle of the fair value gap, the inversed, right? This is normally the most accurate, right? and you will save a lot of times of hitting the stop loss. Because if the price comes here, right, inverses, taps you in, and travels all the way here, you probably fuck. But the price can travel in between, test this fair value gap, fuck around, and go in your favor, right? So this is the safest stop loss you can have. Third candle with the fair value gap before the inversion or during the inversion, right? So now you go inversed. This is your entry over here, right? You're going to wait for the price to tap in, right? You're going to wait. Another important thing, right? You want the price to tap in before it takes the liquidity. So this is the first liquidity on a small time frame, right? This is where you can get break even. This is the first liquidity. So after this is taken, you should go break even, because once the first liquidity on a 1 minute is taken prior, that's above your entry, once this liquidity is taken, we expect price to induce and go higher. We don't want price to start going lower, right? Once this is taken, we expect price to create inducement fair value gap, right? To have a getaway fair value gap, and to stay open at 50% and continue expanding if you're right? If you're wrong and the price inverts the fair value gap, then you want to be on a break even to be able to avoid the loss, right? So it's very important to put the break even once the closest 1 minute liquidity has been taken, which is this one here, right? If price doesn't tap you in your entry, before this liquidity is taken, then cancel your order. Why? Because if this liquidity here is taken, price might want to reverse. Again, this is small things that will save you from losing trades. Small things like this matter, right? And the best setups, they're gonna follow this order, and they're gonna respect this order, and gonna give you a safe entry with a safe exit. You're gonna avoid losses, right? Sometimes you're not gonna have them, and maybe the entry is still gonna work out. But the times you're gonna have them and you're gonna be able to get away safe on a bad setup is gonna save you ass from so much money and losses, right? So it's very important to take setups that allow you to get break even and allow you to enter safely, right? So this is small things like buying in discount, selling in premium. Don't enter if the liquidity is already taken, get break even on the first liquidity, things like this you need to manage, you gotta manage to be able to avoid bad setups, right? So now we're gonna wait, right? If price taps here before it takes this high, we're gonna enter the setup. If price comes here, takes this, without entering us, we're gonna cancel the order. So now we're gonna wait. What's gonna happen? Price taps us in, right? What does that mean? It means we're in a good position. We just swept the liquidity, tapped into the fair value gap, inverse this fair value gap, price tapped us in the position before it takes the break even, aka the nearest liquidity, and now we're good to go. Now we're just gonna wait and see what the price is gonna do. Right now, you're just gonna wait. The next thing you should be focused on is getting break even once this is taken, right? So let's go further. So find profits. Okay, now this is taken. Once this is taken, you're gonna go break even, no question. If price comes down right now and stops you out, you're wrong. The chances of this trade going back in profit, very slim. So you should be very comfortable having break even right now. This liquidity has been taken, and the next liquidity was taken. So this trade, if it's gonna work, it's never gonna go down here, right? You can be sure in this. If this trade is a winner and it's gonna go to your TP, you should be absolutely break even, not to worry about this. Because if this trade pulls back right now, for any reason back here, it's gonna go all the way down here and it's gonna stop you out. And that is like almost 100% safe, tried, tested, right? I've done this so many times. Never hold this trade if it pulls back. Break even straight away after the first liquidity is taken, right? The times this is gonna come back and enter and then go to UTP, very, very, very rare. And the times it doesn't, it's very, very often. So you're gonna get fucked so many times until it works out your way by just not putting break even. So now you're gonna go break even, right? I know I talk a lot, but this is like important things for you to really look at and follow when you trade. Cool. So now we have this inversion, price, we break even, price takes this. At this point, we have no risk, right? The second buy side liquidity we're gonna look for is this guy over here. So you're gonna wait, price has a small pullback, right? But we break even, right? Almost stops us out here, right? If it stops us out and takes this, we out. That's it. That's why you put the break even here. This will get respected many times. So you should be very comfortable with having break even right now, right? Especially on the early entry like this, right? Remember, guys, I also told you on the 3 minute there was a fair value gap, so you could have taken this fair value gap. But if you were taking this fair value gap, you were gonna get stopped out with this wick right now. Why? Because you're taking an entry in a premium, right? It's a singular fair value gap. You know, so it's a good fair value gap. So you're going to be riding the move so far, but you're most likely going to get stopped out on a break even because that liquidity on top was taken. You would be break even here, you're probably going to get stopped out, right? But if you were taking an early entry in the beginning in a discount, you will be comfortably will be able to put a break even, right? So is this always going to happen? No, you're not always going to get stopped out. You're not always going to get a perfect entry. It's never going to be picture perfect, right? But sometimes you have the opportunity. You need to decide which one you're going to take, how you're going to manage it, right? Which one looks better to take, you know? You can never know for certain. Like if I could tell you guys for certain, this is the type of entry you're going to take, or you're going to buy in discount, you're going to do this, you're going to do this, and you're going to win 100%. It doesn't work, right? I'm telling you how to read price action, but regardless of how you read price action, you're going to have to make decisions. And the decision might not be the perfect one, right? It might not be the decision that's going to give you a clean trade and not stop your break even, whatever. You don't know, right? That's the point of trading. You really don't know. You're going to do the best in what you know and what it's most likely to happen, right? If it doesn't work, you're going to come back again, right? So if this entry, you enter in the first fair gap to go inverse in the discount, you'll be in profits right now. So let's go further. Right now, you could take partial, you know, you could probably take partial around here, 50%, or maybe at this liquidity here was taken, you could have taken partial if you take partials. If not, you'll be holding this whole position right now. You're going to go a bit further, right? So now, the 40-piece hit, right? The 40-piece hit, that area here, buy-side liquidity is taken. The next area of buy-side liquidity is going to be over here, right? This is going to be the next area of buy-side liquidity, this guy over here, right? So right now, you should be honestly satisfied, you know, because you probably call like, what is this? You probably call like at least 3R or more, right? So over here, if you put your stop loss down here, you call this call move over here, that's 3.2R. 3.2R, that's a lot, right? So you should be honestly satisfied with this over here, right? However, if you feel that's going to be like a big rally, which it was on Friday, what you can do is move your stop loss over here, you know, instead of taking your TP. Move your TP further, move your TP over here, and put your stop loss over here at the top, and just let the rest run as much as you're comfortable, right? As much as you're comfortable, right? If you put your stop loss here after the break, let me see if the candle is going to retrace to stop you out. Let's see. Questionable when you put it. If you put it straight away after this candle close, you're going to get stopped out. If you put it after the two candles, you're probably going to catch the rest of the move. This is kind of like, you know, it's personal preference on how much risk you want to take, how much patience you have, right? Because a lot, like, you don't know if the price is going to rally, because for the rest of the day, it did went to rally. Like if you go further, right? If you go further, let's see what happened further. The price just kept on going up all day. You know, it was rallying like crazy, right? It was rallying and 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 rallying. Now, did you know how much it's going to rally? No. Even in the higher time frame analysis told you that it's most likely going to go high. You never know. Like it could have come, you know, price could have come here, do this, and just boom. You know, like you don't want to go for this, right? So I would personally be satisfied with this trade over here. Maybe put my break even at the top and let it run until the next TP and then close here for sure, right? But obviously this is kind of personal preference what you want to do, right? Most of the times I would just take full TP here because it's no promise. If I try to put my break even here, you know, price can just, you know, literally just sweep this and reverse, and I'll never come back for me to take TP, right? So it's risky, but if you get it right, if you're lucky, you'll be able to catch bigger runs, right? But generally, this is how you find good setups throughout the day. This is the analysis you should have when you're trading. You should have your chart pre-marked before market open. Mark all the fair value gaps on the high time frame, 15 and 1 hour. Mark all the liquidity zones on the all around near price. Wait for sweep. Look for an entry in discount on premium, depending if you're selling or buying. Look for a nice inversion. Look to get on the break even. Make sure the nearest liquidity is not taken before you enter on a pending order. Make sure you get break even once the liquidity is taken, and just make sure you manage the trade accordingly to the price action was giving you, right? And obviously, you know, if it happens that doesn't work out when you lose, make sure you don't lose too many times to blow your account, right? If you lose once, maybe take 1, 2, maximum 3 losses and just get out of the chart, right? There's no promise, right? This works today, not work tomorrow, right? But over over a period of time, it's going to work and make you more money than it will not work, right? That's the whole point of trading. But for you to be able to benefit of making more money than losing, it's going to be only matter of self-discipline, of not going on tilt on the days it doesn't work. Be able to say, that's enough, I'm done for today, I'll come tomorrow and do again, right? That's the most important thing. Because if you're not able to say that's enough, I'll come tomorrow, you're gonna get fucked that day so bad. Then there is not gonna be next day. There's not gonna be tomorrow, right? So if you have a bad day, bad 2 days, bad week, even a bad month, the most important thing is to survive through this, right? I know it's hard on pro firms. Majority of you trade for pro firms, but you guys haven't even had 99% of people haven't even been for a bad week or two, and your risk management should allow you to go for a bad week or two of just losses, still survive. But majority of people can't, because they will take a couple of losses and just blow the account. And I'm part of the majority of people. I'm not saying I'm perfect. I've done it so many times. It's terrible. But that's really the key. When you got it on lock and you follow these rules, magical things can happen with your trading. Okay, guys. So hope this price reading and tutorial here and market recap, case study, however you want to call it, helps you out. If it does, please like this video and leave a comment and share it and all these good things. Subscribe to my channel, so maybe I'll make some money from YouTube one day. And hope you have a great Christmas and New Year. Bye bye.